This morning, the worldwide sell-off is getting more intense, with tech playing a major role. I would like to introduce Wedbush Securities Managing Director Dan Ives. The Nasdaq is currently down around 856 points. Naturally, NVIDIA, Apple, and a few of the major laggards. How do you feel about the sell-off, Dan? Right now, it's a falling knife. Would you like to take the knife? Get your NVIDIA keychain quickly for less than $10. We are offering a huge discount exclusively to the first 100 orders. Indeed, as you can see, we are guiding investors through this difficult time by examining the winners and tech names. This AI revolution is what I think it will be. Look, investors are undoubtedly phoning today and throughout the weekend asking, is this the end? Is the tech bull market coming to an end? It's not, in my opinion. As has been our strategy for the past 24 years in the tech industry, I think this is merely a huge panic of dread that will open doors for companies like NVIDIA, Apple, Microsoft, and Amazon. Are you advising clients to purchase this when they call you this morning? We'll call it weakness, but wow. Does it feel like more than that? We've been, I'll say, practically table pounding it when it comes to putting the brands and levels you want to own. I think they're going to see this as more of an opportunity than, catching a falling knife because of where the growth is. You examine profits. You examine the figures. I'm in Tokyo right now, and AI is in high demand throughout Asia. Despite what we are witnessing with this Nikkei sell-off here in the global rout, that is not going anywhere. Today, we are communicating that to investors worldwide. Dan, I want to briefly put Apple on the screen because, in addition to the events of the previous day and the obvious job figure on Friday, one of the pressure factors was the announcement made over the weekend on Saturday that Warren Buffett now formally owns stock in Apple. He remains the company's biggest shareholder. It appears that he has been attempting to raise money. He has clearly sold out of other equities as well, which I believe is contributing to the market's gloom this morning. However, this stock is currently down 7%. Why do you think that sale occurred? You see, Buffett was making some sales in the first quarter. Now, to be fair, the 50% sale was really eye-popping and, I believe, attracted everyone's attention. Here, it will increase the pressure. It remains his most valuable possession. He is a big fan of Cupertino, who has nearly twice as much money as BFA. We believe that if you look at Apple's most recent quarter, the outlook, and what I believe to be 270 million iPhones, in a window of opportunity for an upgrade, together with an AI-driven upgrade cycle ahead of us, there is a good reason to hold Apple rather than sell it. Look, everyone pays attention when Buffett speaks. Definitely, and with good reason. However, despite some of the anxiety here, now is not the time to sell Apple. This is a chance, in my opinion, especially as Apple enters what I consider to be a truly historic cycle of upgrades. Earlier, we had a somewhat macro conversation with Tom Lee about the direction of things and potential developments over the next month or two. I don't know never, but he felt that it could be difficult to achieve true stability until October. Therefore, it's really difficult in August and historically, September before you truly know if you have your sea legs or not come October, even if you believe the market will rise in the days that follow a decline. Yes, look, I believe Tom has some very wise things to say. The next few months, especially before the election, are going to be a seat belt moment. However, if you consider the fundamentals of technology, a soft landing and a Fed-cutting environment, all of these indicate that now is the right time to acquire technology, and I understand. Yes, after spending the last 18 months in hibernation mode, the bears have won in the last week or two. And while I get that, if you look at high-quality, large-cap technology into an AI, which I consider to happen once every 40 years, those are the names you own here. And I believe that's the reason we're out here supporting one other during this difficult time. It's not time to use the lifts, and this is, the profits that we observed are generally quite favorable for the Mag 7, albeit occasionally people nitpick. Therefore, what we're witnessing right now is most likely just a few contractions, or some air escaping from the excitement. What would happen if there was a negative feedback loop and things did start to improve, and you did receive not only the profits side of things, but also the multiple side? The Nasdaq is already down 10%. Isn't that right? Where on earth might that bottom be? like the self-fulfilling prophecy. I believe that the concerns at the moment are unwarranted, not just because of what we saw in earnings, but also because of what I see in terms of our checks and demand for the remainder of the year 2025 here in Asia. Look, I believe the street will be fighting this ghost of a thing because of what might be around the bend. However, if you examine the foundations here, they are robust for technology. Balance sheets are sound, and the amount of money spent on AI follows a once every 40-year pattern. There will be losers in this, you see. Take a look at Intel. If that was clearly a disaster, and a few others that is. However, you hold the names of quality tech, big cap tech, software, and semis here, and you don't sell them, even though there are clearly a lot of anxieties going on in the world right now. Yesterday, several members of our investment committee were making changes, or if you want to use the word dislocation, to create new positions or add to existing ones. Now joining us from New Edge is Rob Sin. It's interesting, Rob, because we've talked about not being at NVIDIA a lot over the past few months. Although you had several tech names, this was the one you didn't own, but you do now. Tell me why. As you can see, Scott, when we examine our portfolio, it's specifically benchmarked against the Russell 1000 Growth Index. Additionally, the average stock in the Russell 1000 Growth was up 5% if you look back to the heights. While the index was up 21%, our average stock was up 15%. Not owning NVIDIA was the reason for all of that performance underperformance. Therefore, it calls into question how you construct portfolios that are meant to behave in a specific manner within client accounts and ensure that you are not taking on what is known as active risk or tracking error. Consequently, we examined our portfolio yesterday after a prolonged period of underweighting the stock. A firm like O'Reilly, which has been and continues to be a high-quality company with attractive returns and many defensive traits, was trading at a very high PE in comparison to its history, and same-store sales were beginning to decline. We therefore looked to that position in order to transition into a position similar to NVIDIA. In doing so, we are improving quality, taking advantage of a recent valuation reset, lowering our tech underweight and lowering our tracking error and active risk within our portfolio. Additionally, we thought that a half position made sense because they will be making money in the coming weeks. Now keep in mind that we didn't take a complete position because we still believe that there is some short-term risk here, whether it is due to the unwind, this interest rate move, or additional jobs data that could frighten markets. We do believe that there may be a chance for you to purchase additional at reduced prices. However, the message to your investors is that you cannot simply consider what you will do from a macro perspective when you observe volatility. You must be micro and surgical, and I would imagine that you would run 5 distinct strategies across all of our portfolios. As this volatility continues to improve the quality, you will see that we are making numerous modifications. Right now, none of us can tell if this is an unwanted growth scare or a welcome cooling. If the latter, we will have several opportunities. The important thing is to get clients ready to take action. I'd like to share with you another unusual activity we did. We were long duration a month ago. I've never witnessed a bond move like the one we witnessed here, and we've closed it out and are currently cutting duration, but only because it's gotten much less appealing. According to Rick Reeder and all of the committee members, there is a lot to do, and if you're ready for it, opportunity arises from turbulence. Get your NVIDIA keychain quickly for less than $10. We are offering a huge discount exclusively to the first 100 orders.